Hello everyone, welcome to Brilliant Bankers. In today's session, we will be discussing about the asset classification and the provisioning norms. What is asset classification and the provisioning norms in the bank and financial management? So, what is an asset classification? All the assets of the bank are classified into four types. So, what is an asset? All advances that has been given out from a bank is an asset. So, it is classified into four types. There is a standard asset, a substandard asset, a doubtful asset, and a loss asset. A standard asset is also known as a special mention account, wherein if there is any delay of payment, it is kept under a special mention account. We can say that special mention accounts are of four types. It is a special mention account NF, which is non-financial, does not deal in a financial matter. If there is a overdue in an account for more than 1 to 30 days, then in that case it is called a SMA1. If there is a overdue from 31 to 60 days, it is called SMA2 or a special mention account 2. And when the overdue is above 61 to 90 days, it is called a special mention account, which is numbered as 3. Then comes a substandard account, wherein the account has entered into an NPA category. There is a non-performing asset category after the initial 90 days, and this is up to the first 12 months of being an NPA. The doubtful account or the doubtful asset is divided again into three types: D1, D2, and D3. The D1 is from the next 12 months, that is after NPA, after the substandard, the first 12 months after substandard. Doubtful 2 is the 24 months after doubtful 1, and after that, it becomes in doubtful 3. And at the end, it becomes a loss asset. Now, let's have a small introduction about all these things. So, what is an asset of the bank? All the advances are the asset of the bank. Interest that is charged on the assets are the income for the bank. So, whatever advances that are being provided by the bank and the interest that is earned is the income for a bank, which is done in the process of recovery of advances. How are the advances being taken back? The process done for that is called recovery. When there is a delay of more than 90 days of interest on the same account, and till the time it is not actually received, it is called a NP. So, what is the income in an account? We can't take the income in an account on a advance account on a day-to-day basis. It's only done after it is actually received. So once an account crosses that 90 days limit, it's in an NPA account, and as and when there is an income received, only after that we can say that the income has been received, that too in the credit of the interest. Then the same asset becomes a non-performing asset when there is no interest or the principal being paid. The interest quotient is to be cleared initially and then the principal. When it is not being paid, it becomes a non-performing asset. So there were some rules and regulations that was introduced in 1991, which was recommended by the Narasimhan Committee, that the balance sheet of the bank is to be transparent and comply with the international accounting standards. A committee was formed by the then government for forming a new setup of rules for the NPA action or for the credit risk of the banks, which was according to the Basel rules. So a Narasimhan committee was formed, and Narasimhan committee gave out few recommendations which were to adopt a uniform practice for the income and debt provisioning. That is, different banks in the same locality had different rules of which they were giving the loans or advances at different interest rates. They didn't have a common interest rate, so there was a lot of competition between the interbank themselves, which did not help the banks to grow. So there was a practice that was brought in, which should be uniform in the practice of the income and debt provisioning. On the recommendation of committee, it was later introduced by the RBI in a phased manner, that like the prudential norms for income recognition, asset classification, and the provisional norms. The asset classification that we just went through was also brought up in that committee. So income recognition, what is the kind of income that a bank is going to earn? The asset classification, that is the what is the classification of the asset that a bank has given on advance, and what are the provision norms if a asset goes as a non-performing asset. So what is the provisioning to be done for that particular asset? These were the things that were brought out in the committee, and the norms are also called the IRAC norms, that is the income recognition and asset classification norms, which also includes the provisioning norms. Now let's go into the definition of few words that will be used again and again in this chapter. One is out of order. Out of order is in the case of only two type of accounts, that is a cash credit and the overdraft accounts. Out of only the cash credit and the overdraft accounts become a out of order account. So if an account or if an outstanding balance remains continuously in the sanctioned limit or a drawing power. What is a sanction limit or a drawing power? So sanction limit is a limit that has been sanctioned on the time of taking a loan. That may be on the hypothecation of the goods that are in a business. And the sanction limit will be about 75% of the goods that are being held in the business. And what is the drawing power? The drawing power will be a maximum of the sanction limit, or it can be lesser. So sanction limit may change because the sanction limit is on the goods that is being held with the trader on which the loan has been issued. If the goods that is being held is lesser, then automatically the sanction power comes down, wherein the drawing power also comes down. So if an outstanding balance remains continuously in the sanction limit or the drawing power, and or there are no credits continuously for a period of 90 days, as and on the date of the balance sheet, or credits are not enough to cover the interest that has been debited during the same period. If the credits in the account are not enough to cover the interest for the period of that 90 days, then the account is called as a out of order account. Out of order accounts are only will be the cash credit account, the CC account, or the overdraft accounts. What is an overdue? Any amount that is due to a bank under any credit facility is overdue if it is not paid on the due date fixed by the bank. For example, if an EMI is not paid, the date of payment of an EMI is 5th of any month. If it is not paid on that month, on that date, it is called a overdue account. If there is a delay in the payment of a EMI or any amount that is to be credited to a advances account, then it is called a overdue account. What is a non-performing asset? That which we will be going through again and again in this chapter. Any interest and or the installment, if it remains overdue for a period more than that of 90 days in the case of a term loan. So in the case of a term loan, if an interest or an installment, it's not interest or an installment, interest and also its installment, if it remains overdue for more than that of a period of 90 days, in the case of a term loan, it's called a non-performing asset. In the case of a CC or a overdraft, if the account is out of order, it is called a non-performing asset. If there are any bills that remain overdue for a period of more than 90 days, that is any bills that is purchased by the bank or any bills that has been discounted by the bank, if it is overdue for more than a period of 90 days, then it is called a non-performing asset. In the case of agricultural loan, it can be divided into two types: the short-term loan and the long-term loan. The short-term loan is that there will be in a year you have two crop seasons. That is, the crop season will be of a period of 6 months. But long-term loan, you take it as a period of 1 year. The crop period will be 1 year. In this condition, the short-term loan, if the due remains overdue for more than two crop seasons, if the installment is due for more than two crop seasons, in that condition, that agriculture loan is a non-performing asset. And in the case of a long duration or a long-term loan, if the installment is overdue for a period of more than one crop season, it is called a non-performing asset. So what are the type of accounts? We have already seen that it's a standard account, the substandard account, the doubtful account. Standard asset, substandard asset, doubtful asset, and a loss asset. So what is a standard asset? You have we have a standard asset divided into three types: the special mention account 0, special mention SMA 1, and SMA 2. In substandard, we have it as substandard account, wherein the asset is already in a NPA. In doubtful account, we have it as doubtful 1, 2, and 3, and then comes the loss asset. So, what is a substandard asset? So, any asset is called a substandard asset if the NPA period is less than or equal to 12 months. There is 12 months from the last date of any collection in that account. It's called a substandard account till the period of the 12th. For example, if a collection was has come into the account on 31st of December, let's take the year of 2023. On the 31st of December, the account will be substandard till any credit to the account for the principal and the interest till 31st December 2024. And then it will be converted into a doubtful account. Doubtful account will be period, doubtful one will be a period for the initial 12 months after the completion of the substandard or from the initial date to the 24th month. Doubtful 2 is again the after completion of doubtful 1 for a period of 24 months, and doubtful 3 is after that. That's a total period of 36 months. What is a loss asset? Loss asset is always identified by the bank, and it is to be written off wholly, but which is not on the hand of a bank's branch, which should be taken care of by the head office. So, what are all not a NPA? What does not come in a NPA? Let's take the condition of a consortium account. What's a consortium account? For example, one person, there's a company that wants a loan of about 30 to 40 crores, which one bank in his area was not able to provide. So he approaches a bank number 2, bank number 3, and the bank number 4, where all the 4 banks pitch in and give a loan of 40 crores for that company. Everything is good till the day the EMI is being paid to each and every bank. One particular day, bank C does not receive the EMI, and the account in the bank C goes as NPA. So what happens to the other 3 banks? Nothing happens, because only the account in bank C becomes an NPA, and all the other 3 accounts which are regular will be called a regular account. So in that condition, this consortium account will never become a NPA for the other banks, except for the bank in which it is happened. And what about the government loans? In the case of the central government loans, in the case of a state government loans, it can become an NPA. In the case of a central government loans, the loan is to be considered standard, and no provision is to be created under the for any loans that has been guaranteed by the central government. So no loans will be provision for any loan that has been guaranteed by the central government till the date the guarantee has not been withdrawn or repudiated by the central government. So coming to the NPA provisioning norms. So why is this provisioning being done, and what is the reason? Whenever a loan or advance is being given to a customer, the precautions are to be taken by the bank for which these provisioning are being done. So whenever the account is a standard account or a standard asset, the minimum provisioning that is to be done in the case of an agricultural or a small and medium type enterprises sector is 0.25% of that loan, of the loan amount or the advance amount. For a standard account, you can take a screenshot of this slide, which will be very useful in the future also. So for a standard account or a standard asset, it is 0.25%. For any other loans, it is 0.40%. Coming to the condition of a commercial real estate, it is 1%, and if it is a commercial real estate for residential houses, it is 0.75%. So what is a teaser rate housing loan? Teaser rate housing loan is that loan in which the interest rate keeps on changing. In that condition, the 2% of the advances is to be kept as a NPA provision. This is the case of a standard asset. So in the case of standard asset, we can take this as a condition that direct agriculture or the SME loans it's 0.25, any other loans it is 0.40, commercial real estate it is 1%, and if it is for the real residential houses it is 0.75%, and in the case of teaser rate housing loan it is 2%. Now let's jump into a substandard asset, that is after the account becomes a NPA account. Once it is in a non-performing asset account, now here in this condition we have to divide it into a secured account and an unsecured account. So what is a secured account? At the time of granting the advance, if the value of the property is more than 10% of the advance that is being issued, for example, a loan of 20 lakh is being provided and the value of the property is about 3 lakh. In this condition, it is about the 10% scale of that 20 lakh. In that condition, it is called a secured account. So in the case of a substandard account, we are going to check whether the loan was a secured loan or an unsecured loan. Secured loan on the date of granting of that advance. So if it is a secured loan, we maintain a 15% provision on the loan. If it is a secured loan, we maintain a 15% provision. And if it is an unsecured loan, a 25% provision is to be maintained. And in the case of an infrastructure loan, a 20% is to be maintained. So in substandard loans, we maintain a provision of 15% if it is a secured loan. And in the case of unsecured loan, it can be divided into two. In the case of infra loans, it is 20%, and any other loan which is unsecured, it is 25%. Coming to the doubtful category, which is again divided into doubtful 1, 2, and 3. You can take the standard asset as an example, wherein it was 0.25 and 0.40. So here, it's 25% in doubtful 1, 40% in doubtful 2. So agree, and all loans comes over in doubtful 1 and doubtful 2. The 25 and 40 comes over here. In this case, it is we are going over the not over the value of the property. We are going over the realizable value of the property. If in case we are going to sell the property, the what is the realizable value of the property? If it is below that percentage, and we take the 25% of the realizable value of the property, and 100% of the shortfall amount is to be kept as a provision. So the property, the value of the property is 10 lakh. We take 2,50,000 as provision, and the remaining NPA, whatever the amount be, it is to be kept as a shortfall. So in this case, 25% of realizable property and 100% of the shortfall in the security is to be kept in doubtful 1. In doubtful 2, it is 40% of the realizable value of the security and 100% in security 3. In the case of doubtful 3 assets, 100% of any amount is to be kept in the realizable value. So, as a provision. If the realizable value of the security is less than 50%, then the asset automatically comes into the doubtful category. And if less than 10%, then it is automatically called a loss category. You can take a screenshot of the slide so that you can go through it whenever you require. So with that, we come to the end of today's session. If you do have any doubts, please feel free to leave them in the comment section below. Your feedback is very valuable for us. Do like, share, and subscribe our channel, The Brilliant Bankers. Have a great day.